For a closer look at what may be next for Fed leadership, I'm joined by Bill Campbell. He is Global Bond Portfolio Manager at DoubleLine. Bill, thanks for being here. We both know that Powell's term expires in May. Perhaps this is no longer a four-man race. Maybe we've come down to three candidates. I mentioned Hassett. This list also includes Fed Governor Chris Waller, former Fed Governor Kevin Warsh, and then there's Rick Rieder, the CIO of fixed income at BlackRock. We're being told right now that Rieder's candidacy has gained a fair amount of momentum. Do you think the administration got feedback from some influential market players and maybe they voiced some concern about putting into this position a person that may be overly dovish or perhaps more problematically seen as carrying water for the administration a bit?
When we look at the fact that the president hasn't made the announcement yet, clearly, I think that this list, nobody is, really has caught his attention or has, caught the spark in his eye just yet. I like the idea that Rick Rieder's candidacy is starting to, gain a little bit more momentum. When we looked at the poly markets last week, he was down at the bottom. It was Kevin Warsh that jumped up to the top. And I feel that, Kevin Warsh and, Chris Waller, for that matter, although more orthodox candidates, may not be willing to, as you stated, carry water as much, for the White House and for this administration. I think that Kevin Hassett, the concerns around Kevin Hassett, maybe it was more concerns about, Fed credibility or being able to get, the board to vote in line with what the chair wants. We've seen a lot of discussion about the Fed moving more towards a Bank of England model where everybody has a vote. And that would be a move away from what we've currently seen of the chair being able to pretty much gain consensus. And then where there are dissents, it's to signal to the market, what the committee is, trying to signal that maybe they plan in the future to move in a direction. With Hassett, I think the concern was it would be a bunch of independent votes. And, that I think for the Trump administration, less the concern, like you said, that he wouldn't carry water, but more the concern that he couldn't affect the outcome that the Trump administration would want. So maybe Rieder would have a little bit more of that gravitas. And I think there are concerns about Kevin Warsh and, especially Chris Waller, that they might be too independent and may decide that, aggressive cuts may not be warranted and not push for that.
Also on Thursday, the Supreme Court will be hearing oral arguments in the case Trump v. Cook. This is very important in terms of deciding whether the president has the power to fire Fed Governor Lisa Cook. And it's being viewed as a critical case because it's going to essentially address this removal protection that's been afforded members of the Board of Governors. And obviously, it's coming at a time when the issue of Fed independence is right at the top of the list for markets. They're very keen, as you just kind of alluded to any form of political pressure. A week ago, we were talking about the DOJ issuing subpoenas to the Fed over statements by Powell. Obviously, that's related to the renovation project of the Fed's headquarters. But this criminal probe just looming over markets right now. The Wall Street Journal had a survey of economists talking about the criminal investigation running the risk of damaging not only investor confidence, but weakening the dollar at a time when China is expanding the use of its own currency around the world. Are we at a situation here that could be maybe a little bit more precarious than the market believes right now? Or is this noise and we really need to kind of focus on the signal?
You asked a lot of great questions, and I'm going to, try to tackle them, one by one. I do think, the Lisa Cook oral arguments, let's see exactly what's presented, to the Supreme Court, the type of questioning that comes out to see, the court has been taking somewhat of a favorable attitude towards this administration. So I think that would give us a potential hint as to the latitude that they might provide this administration as far as being able to remove, governors. I think the Powell investigation is something that needs to be taken very seriously. I question the merits of, these underlying subpoenas that have gone out and the intention for it. It was two quarters ago that we really dealt with this. And, I do think that Powell, in my understanding, kept Congress apprised of all of the budget changes that were happening with the additions, with the renovations at the Fed. And if we are, using a justice system to affect economic outcomes, I think there needs to be separation. In the way that our government was set up was a separation of powers, and I think that that is a core tenet of confidence that underlies investment in the U.S. So I think we have to keep a very close eye on Powell, but I do think now the outcome of the subpoenas needs to be watched closely. And then you mentioned China. Obviously, we are starting to see slowly the questioning of U.S. institutional strength, whether it comes to Fed, whether it's around Fed independence. We also now have questions about data veracity. Yes, we had the government shutdown, but there's questions about, as I discussed on the housing side, how we're statistically calculating things. There are other elements that are popping up as well. And we have a large foreign investment in the United States that has built up over the past 2 decades. And the concern there is, as the questions rise around institutional credibility and independence, not only of the Fed, but really of all institutions in the U.S., that has the ability, to shake investor confidence internationally, and it could cause a rotation out of U.S. investment internationally. And one final point that I've been mulling over, and maybe just since we're talking, it's worth bringing up in this context. You were talking about China, and although China has been expanding their trade and their currency use across the globe, quietly, if you look at the Treasury, the TIC data, the Treasury International Holdings data that they have in custody at the Fed, there's been a reduction of U.S. Treasuries held, in custody for China. And it's been a meaningful reduction over the past, several quarters, and actually over the past several years. The most recent TIC data shows that, despite a little bit of Treasury volatility, we've seen, Treasury rates generally hang in there because there's other buyers that have stepped in. It's been the UK, the EU, and Japan. And I have to believe that a lot of this is around negotiations that we had around trade. Now, going forward, if we are, going to Davos and starting to really question the underpinning of the relationship between the U.S. and these nations and the European, the UK, and the Asian nations, I think that also could present a risk of who's going to fund the Treasury issuance that's going to be coming to fund our large deficits over the course of the next several years as well. So it's not just a concern on the currency. I think we need to take a careful. We need to be very careful about the perception and the reality of institutional erosion, in the U.S. because the large foreign investment, over 60 trillion of foreign investment sitting in the U.S. easily could start to be allocated away, and that would put a lot of volatility back into markets.
Bill, we'll leave it there. Thank you so much. Bill Campbell is Global Bond Portfolio Manager at DoubleLine, joining us here on the Daybreak Asia podcast.